All right, everyone. We are back and we are live. And Matt is still the king of thumbnails. I just reused one and made a new title. Matt, can you show off your beautiful thumbnail, please, to everybody who hasn't seen it?
First and foremost, before we get started, we don't have to do the disclaimer yet, but shout out to like the 6 or 7 people that have been constantly watching or listening to the show on Spotify. I really appreciate you guys. If any of you guys are actually interested, I'll put the link in the description of my video and then I'll share it with Steve. But I'm only doing it. I tried it as an experiment, and there's like a loyal 6, 7 people that just continue to just watch it. And so I'm doing it for you guys. A couple people reached out. They said, would you put it on there? I'm doing it. We're up to 71 Spotify followers. I would love if you guys could at least take an opportunity. But Steve, sorry, I got distracted there. So I'm just posting that in my chat. So anybody that's interested, feel free to jump over to that.
We got to show the people. We got to give the people what they want. We got to give the community what they want. Show them the thumbnail, Matt, please.
Is this the right one?
It's way better than my thumbnail.
You look like an absolute madman in this one, in a good way.
I mean, you even have the 80s brick cell phone on the table, on the desk. I love it. I love it.
Steve.
That I don't even have to ask if people know what movie this is from. People know. Everybody knows.
See, Cole knows. Cole, I would love for you to have a conversation with Cole. Cole is a gentleman who, honestly, I wouldn't be surprised if Cole ends up leaving this life with 8 figures. The guy's a smart kid. Really smart kid. Love that kid. I talked to him.
Oh, Amit's going to be in trouble from Michelle.
What happened?
He forgot something.
Forgot what? Oh, he forgot to give you something? Hey, the man's juggling a lot.
He's juggling a lot. Oh, by the way, you know who we had breakfast with today?
Are you allowed to say?
We had breakfast with Roy.
Oh, okay. I was about to be like, are you about to? I was like, wait, no. Have you guys officially dropped when you're going to drop the new drop?
No, it's coming out tomorrow. So we shot a new episode. Amit is working away right now. We called in Matt, see if he wanted to stream tonight also, even though we streamed last night. He said yes. I had to take a nap today because I got up at 5:58 in the morning. That's way too early for this guy. I normally don't roll out of bed until about 7:30, 7:45. And we shot another episode today, early in the morning. It was awesome.
Congratulations, man.
Big thank you to the guest. The guest was incredible. And nobody's going to trick me into saying that Amit told everybody who it is, because I know he didn't. So, we'll come out tomorrow. And because of Matt's thumbnail, some people crack open beers. I crack open blueberry pomegranate.
The mango's good too.
A mango is slamming. So before we go on,
I know you're going to do the disclaimer, but because Amit's in the chat, I want him to hear this as well. I can be bought. If people really want to know, I can be bought. It's going to be a lot of money, but I can be bought. We'll start the bidding in the chat, but I can be bought. When I see a number, it has to enter my Zelle before I release it. So just so you know, you can't just start throwing out numbers and be like, oh, I'm just going to throw $1 billion out there. It has to enter my account. 1 billion enters Matty's Zelle to his checking, and I'll release it. But otherwise, I'm keeping it on the DL. I'm excited for you guys. It's a really, I'm really excited.
So we're not financial advisors. We have no idea what we're talking about. Please do your own due diligence. Make your own decisions. don't buy anything just because two guys on the internet talk about something. And keep in mind, we have no idea what your situation is. And we just do research. This is for entertainment and educational purposes only. Thank you, everybody, for being here. We got Dougie, we got Michelle, we got Ray, we got Chels, we got Dafool, we got Pedro, we got Dookie Pie here. We got
I didn't see Dookie Pie yet.
We got a lot of people here. Thank you, everyone. So, a lot of things to talk about today. Market absolutely cratered, but some things went up today. I wonder why that is, Matt. I wonder why that is.
Well, you know, some of my stocks are down. Some of them are up. Some say same but different.
Well, look, my viewpoint on this is that today's market sell-off, it wasn't random weakness, and I think it was not profit taking. All right. I think people really think there's going to be a much bigger macro problem. I think they believe there's going to be higher oil for longer, which is going to increase inflation risk. And the Federal Reserve may not have the flexibility to cut rates as quickly as the market wants. And I think that's starting to be priced in right now. And we saw oil, WTI get to around 80 today. It's starting to pull back a little bit. So we got to see what happens. But this needs to end overseas sooner than later.
Yeah, I'm trying to see what the real is, right? So for people that are listening, there's the futures prices, right? So there's the front month price, which is what Steve's kind of talking about, of $78 to $80 a barrel, West Texas Intermediate. But then there's the how are people pricing the forecast, right? So going out in time, you know, is it something where it's still going to stay 78 in the coming months, or are they pricing that it's going to go back to reality? I'm kind of curious. I'm trying to find a good site that I trust. I mean, Steve, they still kind of only have it up above 70 until the midsummer, and then after summer, it just kind of tanks back to the 60s again.
So I'm on trading economics. I'm seeing, because I think this is real time because it's moving right now. Crude or WTI is just under 79. You got Brent almost 84. They've pulled back a little bit. Nat gas is still under 3. Gasoline still under 275. But oil at these levels is not good. We know that. And right now, in my opinion, okay, I'm not the smartest, not the sharpest. The biggest driver is energy at the moment. I think the market's really looking at the possibility of a wider regional conflict. And they're just asking the question about what happens if energy supply is disrupted. So it's real fears around the Strait of Hormuz. And I don't know. I think my original assessment is it's going to be over in a week. That week is not up. I don't think that this pulls into next week. I really don't. I'm staying on that term right now. If it's not finished tomorrow, I think something's going to happen over the weekend where come Monday, Tuesday, this gets alleviated and we see WTI back in the low 70s.
I think that the 60s was too low for it anyway. But I mean, going back to the geopolitical stuff, I mean, I don't like to see any of this, right? I'm not a fan of war, but what I will say is I'm a little bit surprised and taken back by, I guess, the skirmishes that have now entered into Azerbaijan. There's been a skirmish now in Cyprus, and I just don't know what the continued proliferation is mainland Europe going to be something that's at bay here? And one of the things I put on X, and it was met with a little bit of pushback, and understandably so, is like it seems like I go back and forth to what is going on because I'm trying to understand, and I'm not trying to say whether I'm for or against, but what I'm thinking now, whether or not this is true, and I'm not trying to spread any FUD or propaganda. This is just my perception of it. is it seems like a likelihood that the United States got some sort of intelligence that would have assumed that, one, I mean, obviously Iran was going for nuclear weapons, and that's been the case for decades now. But two, that there was likelihood some sort of attacks planned, whether it was an attack on Israel, whether it was an attack on other nations in the region. And people are like, oh, but they're only attacking regions that have US bases. Like, well, they're starting to attack other nations that don't have US bases, and Azerbaijan and Cyprus and many others. So, you know, to me, and people were starting to give me a lot of pushback. I'm like, well, when Russia invaded Ukraine, Ukraine didn't start attacking Turkey. Ukraine didn't start attacking Poland. To me, like I said, I'm not a geopolitical guy. It's tough for me to understand really what's going on. It's been going on for decades at this point, since the 70s, that this Iranian conflict has kind of been starting, and now it's kind of coming to a head, at least in recent times. I don't know. I don't know what to think, and I think, unfortunately, when it comes to the energy prices, which is what keeps the world going, heats our homes, allows us to travel, it's unfortunately a byproduct of what's going on with the skirmish that's going on in the Middle East. So I don't know what the answer is. It's tough.
Yeah, I mean, look, nobody knows what the answer is. Nobody knows what's going to happen tomorrow, the next day. At some point, 1+1 has to equal 2. At some point, if this doesn't get resolved, the most powerful nation in the Middle East is going to get squeezed. I don't think we see that. At some point, Saudi Arabia has got to do something. And I really believe that we're in a situation where this has gone on for quite some time. Now, if there's a regime change, the last thing I want to see is real boots on the ground. I mean, I would like for this to be over, but you have no idea what's going to happen. And I think that's why the market is freaking out, because this could have very serious ramifications. Even if this ends over the weekend, if you don't get real regime change, you could have a problem in a month. You could have a problem in 6 months. You don't know when you could have a problem over there. So I think that Saudi Arabia really is going to have to get involved heavily to keep this from spiraling in the future. Not necessarily this week, but coming back into the fold. So we'll see. I ended up taking advantage of something today. I exited ServiceNow.
Okay.
End of day.
Great day too.
Yeah. Once it hit 122, it was up almost $8. I was like, you know what? I'm out. If it pulls back tomorrow and the next day, I'll buy back in. Huge run today. And I said, you know what? And I made a post about it. Markets are down. ServiceNow is up. Salesforce is up. Is this the bottom of SaaS? Like I've said, I think we've seen a bottom, but I took the opportunity to lock in a gain because I think on a day like today, people are going to profit take tomorrow. I'm not trying to front run it, but if the markets go down tomorrow, I could see ServiceNow pulling back. I mean, it's after hours up a little bit. It's still under where I sold it. I sold about 122 or so. So I'm not mad at that.
Steve, I like it. I took the opportunity as well today to sell a poor man covered call on my now. So for people, I don't generally do this sort of stuff, but I did take a swing trade in ServiceNow. I bought 115 calls for August. I'm up 52.5% on those. Not very large. It was like a $10,000, 8 contracts. Like it wasn't like it's a $100,000 bet, right? It's just and I just saw an opportunity where I was like, I'm willing to put $10,000 towards this, and so I bought them on like what was the date that I bought them, Steve? February 19th. So we're a little bit over a week and a half in, and or close to 2 weeks in. And today you saw a 5-6% pop. And so I was like, you know what? I'm going to take advantage of it, just like you stated. And I sold the 140 calls for April and collected about $1,500 in premium. So I don't know. Part of me thought about just taking my 52% and 50% and just calling it a day. I don't know. I think ServiceNow has a little bit more to go. It might be down tomorrow, but I think there's a possibility that I could hit the 130s here in the next month or two. And if that's the case, then I'll probably take my money and run then.
I think ServiceNow is a great company. I think it can still go up, but after 2 or 3 days of what it's done, I wanted to protect that gain, get out. I normally don't trade, but this is not a long-term position. I never said it was going to be a long-term position. If it ran up 1%, 2%, I would not have sold. The fact that it went up so much in one day, I was like, you know what? I'm just going to lock this in. And I can always buy back in. I could care less about a wash sale. I don't care. I mean, I'll buy it tomorrow. To me, this was never something I'm holding for a year. This was always going to be a short-term capital gains thing. So it is what it is. And I was looking at writing a covered call tomorrow, and the premiums were so much for a one-day covered call at the money and just above the money. But I was like, you know what? What if it falls 3%? It's not worth it. It'll eat away all of it. So I just end up exiting.
Sometimes it's worth it to just take the money and run.
Yeah, we can always redeploy it. There's a little company that I have been looking at. There's some people in the comments asking. I may have watched part of the Hood event last night. I may have read some of Amit and Roy's tweets about it, and it may look interesting. Amazon may look interesting. There are some companies that I may roll that money into that I took out of ServiceNow. We'll see.
Is there any companies you're looking at now? Like, obviously, take price, like current price at it right now. Like, removing everything else, like removing. How do I say this? How do I actually want to say it? Removing what the current prices are for stocks and just like thinking about the companies as a whole, the future perspectives. What company or companies do you look at right now and you're like, I need to buy more? Why don't I have more?
Amazon.
And then anything else? What about
Amazon.
Zeta? I mean, just Amazon?
Amazon. No, in all seriousness, there's a lot of companies that I think there's value to be unlocked here. The one company that in my mind, for me, without a shadow of a doubt, okay, is Amazon. Because the narrative around it becoming the first $1 trillion revenue company, they're now expected to become a $1 trillion revenue company a year before they previously were. It was 2029, now it's 2028. They, in my mind, are going to be the largest beneficiaries of AI and robotics. Nobody is going to be able to convince me that they're not going to be able to expand their margins. Nobody's going to be able to convince me they're not going to automate their warehouses or utilize AI on the back end to, one, make everybody that works there more efficient, and two, right size their employee count, which will expand their operating margins. I also think that they will unlock a tremendous amount of value with all the Capex that they are deploying. And the fact that they're getting beat up because people are too stupid to understand that in order for Amazon to lose 500 million in free cash flow, that means that their cash from operations must increase 60 billion year over year to $199.5 billion. So I don't know if Bloomberg's data is correct. Okay, that was a Bloomberg report that gave a very specific number. I think it was 563 million that they're expected to lose on free cash flow. Free cash flow is very simple. It's cash from ops minus Capex. We know that they are going to deploy 200 billion in Capex. So in order for them to lose $500 million, they have to generate 199.5 billion in cash from operations. So we see how much that they're going to monetize their assets there in 1 year. Nobody's going to convince me that these companies are not going to continue to grow. And am I scared about negative free cash flow for 1 or 2 years? No, because Amazon's something I want to hold for 5 or 10 years. Why do I care about 2 negative years of free cash flow when they're going through an incredible build out phase. We've already seen what their build out phases look like. When they built out their largest logistical network, people thought it was crazy, but think about the huge amount of alpha that. Why are you laughing?
I'm
What
not
did I say
laughing.
that's funny?
No, you didn't say anything funny. Continue, and I want to follow up with something.
Okay,
It's not
so
funny. It's mind blowing.
the largest logistical network behind the DoD, you had people screaming about it, yet look at the alpha the stock price generated. We're able to get in today at a much better valuation on earnings than at that point, and this build out could make that build out look like nothing.
Nothing.
So I am very bullish on Amazon.
So I mean, like you stated, like most I've ever really like comprehended before this AI build out that's been kind of going on was like 55, 60 billion. And I remember watching that during COVID that Amazon was about to spend on warehouses, etc., on their footprint expansion. And I was like, what is going on here? Right. I was like, this is insane, 50, 60 billion. And keep in mind, I work for a large company. We have a lot of Capex. And I'm like trying to understand. I'm like, based off of looking at that and then comparing it to something that is 20 times as large, you know what I mean? Like, I'm just like trying to comprehend like what is going on here. So let me ask a question for you, Steve, because you're smart. What do you think the return on investment on that would be at a minimum?
I don't even know how to backdoor my way into those numbers because Amazon does. So I like the way Microsoft reports numbers. I don't love the way Amazon reports because I don't know how much of AWS is simply from cloud versus AI.
Okay.
So I don't know how to backdoor my way into it. Whereas Microsoft gives you intelligent cloud, they give you a lot of different data points. So I'm not sure.
I mean, you got to say 25% return on
Yeah,
capital.
I would think if they're going to this extent, that the ROI is going to be massive. And I don't know what massive really means. But the reason I say massive, it's not just a number on the cash from ops line, it's also productivity on operating expenses. I mean, when you actually go through the income statement, and I will bring it up, this is why and look, there's other ones. If I didn't have, and I have a much larger position in NVIDIA than Amazon. If I did not have as large of a position in NVIDIA as I have, I would be buying more NVIDIA. So I simply be very clear about that. But
so the reason why I asked, Steve, and the reason why like you were like, are you laughing right now? I wrote a number in. So we already have 200 billion. It's kind of where potentially they're heading, right? I was thinking it's going to be closer to 150, but 200 billion, let's just say, really does happen. Imagine they do get a 25% return, and it's going to take time, right? You can't just invest 200 and get 50 billion next year, right? Like it takes, time for this 200 billion to digest, but eventually, let's just say over the course of say 5 years after the fact. So the next 3 years, let's just say they do invest 600 billion over the next 3 years. Multiply that by 25%, Steve. It's $150 billion. They're currently making cash from operations of $150 billion. So you mean to tell me just in these next 3 years alone, they're going to take and grow double the amount that they've grown since 96 to now? Over the last 30 years, they're now going to do that in 3?
Yeah, they could.
Like that is like what, that's why I put my head in my hands, because I was like, holy shit, that could actually happen.
It's a massive number. And the other thing that's a massive number, they're selling their SG&A, selling general and administrative expenses, has gone up from 2022 to 2025 by $30 billion. You're telling me that through robotics and AI, they can't get this number down to $100 billion? I mean, come on. And what happens if they do? That's $67 billion that drops right to operating income. I mean, this is after their cost of goods. Cost of goods is up here. I'm not expecting cost of goods, cost of revenue to decline. I'm expecting SG&A to significantly decline over the next 5 years.
Well,
That's the hidden number people
can I
aren't
just run
looking
some
at.
numbers? Can I run some numbers really quick? So
Yeah.
116.5. Sorry, why did that happen? The period didn't get in. 116.5 for 2021. Can you scroll up? What's the revenue in 2021? 469.
469.82.
So that's 25%. So SG&A was 25% before. And we're looking at 716. So what's the SG&A? 167.
Go at 20%.
It was 716. Okay, so they're tracking still. It went from 25 to 23%.
I mean, they have such a large opportunity on the expense side, which will drop directly to operating income. And then when you think about cash from operations, that will continue to expand. There's a direct correlation, and I was talking about it today on a show that I went on. It'll be out next week. The correlation from investing in Capex to the output in cash from operations and EBITDA. We're seeing it across the board. I mean, can Amazon double their cash from ops? Yeah, they can. And it won't shock me at all because they've done it already. That's the biggest thing. So when I sit here and think about where I want to deploy capital, I don't like taking a lot of chances. Am I taking a chance on Zeta? Absolutely. I also think Zeta's numbers are phenomenal. But for the long term, Amazon, Meta, Microsoft. I love Alphabet.
The more I think about it, the more I think about it, I'm like, why don't I have more Amazon?
I mean, Matt, this is the cold hard truth about Amazon, okay? In 2021, their cash from operations was $61 billion. Their cash from operations in 2025 was 131. So over a 4-year period, it increased by 116%. They've already shown that they can double in 4 years their cash from operations.
Why not do it in 3 times? Why not do it in 3, Steve?
They can't do it in 3 years.
I'd actually that might be a good thing for me to look at is how frequently is there compound annual growth rate?
I'm sorry, I'm looking at Capex. I'm sorry. Their cash from operations increased 201%. So sorry.
Over 4 years?
4 years, yeah. Cash from ops was 46 billion and went to 139 billion.
I would want to look at their rolling CAGR for cash from ops on an annual basis.
I mean, these are the numbers, Matt. Cash from ops 46.3 to 46.7 to 85 to 116 to call it 140. I mean, it's 93,000 increase over 4 years, 201%.
So 200 over 4 is probably a 40% CAGR.
So is Alphabet going to continue to grow? Absolutely. Is Microsoft? Absolutely. I just think Alphabet's run a lot. And I think even though the valuations are kind of similar, I think there's more opportunity for Amazon on the expense side to help increase margins. And they have a dual tailwind because they'll have the expanding cash from operations and the expanding profitability through the expanded revenue. But they will also be able to decrease expenses, which gives it a double tailwind.
So, I'm a lot more familiar with GCP because how they split up the numbers. And I honestly, like, when I look at Amazon, I just look at the whole ops margin. I don't necessarily look at the individual, whether it's e-commerce or whether it's cloud. Has their cloud margin sustained or is it actually decreased?
I have the number. I have everything built out because
I know Google is like massively increased, right? Because like it was just 24 months ago that they were barely breaking even. and now they're at a massive run rate, and which has been one of the big reasons why I invested in Google, period, and paid off for me handsomely. But
so your question is, what percentage is AWS of their revenue?
no, my question is how is their margins as they continue to scale out? Are their
Yeah.
margins sustaining?
Yes.
Not the percentages, but is it at 40% and it's staying at 40%?
So for AWS, and these are these are my notes. Like if I was to, like, these are my notes about how I make my articles and stuff, all the stuff I track. It's sloppy, but it works for me. So bear with me. So on AWS, their margin in Q4 was 35%, Q3 is 34.5%, Q2 32.9, Q1 39.5. I mean, it's been in the 30s for a while. So yes, they're maintaining margins.
Okay.
And that's the big thing. If they're maintaining margins and growing revenue, that's just more profitability.
Just insanity.
So, yeah, I don't want to talk about Amazon for 5 hours, even though I could, but to me, it's the clearest winner. And I think the disrespect that it's being shown is criminal. So we'll see what happens. I think Microsoft's a great investment here for the long term. I mean, why are we going to sit here and think that people that have never worked at these companies, that have never worked in technology, that were crying about the Dow at 10,000, crying about the Dow at 30, crying at the Dow about 50, they'll be crying when it hits 75. Why are we letting that influence anybody's decision? Like selling off these companies to me, and I don't want to say too much about the conversation because I think today's conversation on the second show I did today was very good. And we touched all these areas. And the idea that people are selling these companies off because of the Capex spend it breaks my brain. Just like when Tevis is not in the right position on StreamYard, it just breaks my brain because who else is going to compete with these companies? Who else can deploy 150 to 200 billion in a single year of Capex? There's 6 companies that can do that, and one of them is not. Okay, Apple has stayed out of the fight. There's only 6 companies that can really think about doing that, and they are Apple, who is not, Microsoft, Alphabet, Amazon, Meta, and Oracle. No other companies can come in and drop that money. IBM can't. Cisco can't. None of them can. So
can I ask a question about next week because Oracle reports?
Yes, you can. I want to get to Netflix, so let's remember this.
Yeah, I'm curious. Somebody asked me about Netflix today. I'm not as educated as you. Where is it at, by the way?
Lena just said it's over 100. I'm an idiot.
Wow. Well, I'm glad I answered the way that my buddy. I had a guy who I haven't seen in a little bit. He was asking me if I've been buying Palantir since it dipped, into the 130s, etc. Now it's above 150 again, right? But they were asking me like Netflix. I was like, I mean, it was at 78. I was like, I would have bought it at 78. I was like, I don't know what it looks like at the valuation. I was like, I know it was cheap-ish at 78. I mean, was it dirt cheap? I didn't think it was dirt cheap at 78, but even still cheap. And will Netflix ever be dirt cheap? That's a maybe a black swan event sort of thing. But I was like at 99, that's $400 some billion. It's a lot of money.
Well, I should have bought Netflix in the 70s when I said it was going to rebound, but
you did say that.
Get to what was your other thing that you want to talk about before we go to Netflix?
So are we out of these woods yet, or do you think that there's with respect to SaaS being a problem, everybody being down right now on all this CapEx spend because we literally have Oracle next week?
Look, I think there's too many people that make reactive decisions that are impulsive.
Let them lose money? Is that what you're saying?
For us to be out of the woods.
Let them lose money, is what you're saying. Let us.
Yeah. I mean, listen.
The people that know for a fact that the fucking S&P is going to be 10,000 before 2030. I don't know. Dude, S&P is going to be 15 grand by 2035, Steve.
Okay, hold on a sec. I'm going to answer your question.
What the hell is this?
Did you,
Right or something?
dude, Chamath? Did you see what he said today?
No. Was it a YouTube
You
video?
know how he got into a fight with somebody on X about his social capital stuff? And he made that remark about you generated capital losses. Did you see that whole exchange?
Was it recently or?
Yeah, it was recently.
No, I did not.
Oh my God. So, all right, the short version is that Chamath was talking about something, and this guy said that he lost a lot of money in Chamath's things, and Chamath made a out. And look, I happen to like Chamath a lot. He made a remark that you generated capital losses, and it may not have been the best remark, right? Because look, for Chamath, generating capital loss is great because you don't need to pay that money to taxes. He's a multi-billionaire, et cetera, et cetera. Not everybody's in that position. So I just went to X to look for something, and he says, this guy clapped at me. I clapped back. We then spoke. So I funded his two daughters' college accounts. I hope the kids become better investors than their dad, but in all seriousness, I also think he was very mature in how he internalized our conversation onwards. That's
Pretty
like,
good.
I mean, Chamath, I'll get in an argument with you if you want to fund some stuff for me.
You're like, I got a nephew.
I mean, I'll argue with you.
I mean, I actually kind of like a lot of people think like he's a businessman.
Yeah.
He's a businessman. We wouldn't be talking about SoFi. I mean, maybe SoFi, but he gave capital to SoFi, and SoFi is that where it's at now. He gave capital. He gave capital to Virgin Galactic, and they fucking burned it. Like, I don't know. Like, you can't help everything just because you become a private investment or public investment in private equity, whatever the hell PIPE stands for, doesn't mean that the people that you give that money to will steward the capital as appropriate as you think. You can't win every single one.
So let's go back to what you wanted to talk about.
Dear Chamath. First Burry, then all AI investors, now Chamath. Scorched earth.
Scorched earth. Anyway, proceed, Matt.
Apparently I'm showing my ass, Steve. I don't know.
Proceed, please.
No, I think next week I'm with you. I think I interpreted what you said, that you think that there's likely to be volatility next week associated with Oracle reporting, and it could be an opportunity to pick up more. I don't know.
I'm shook of Oracle. I really am, because they're the ones that don't have a strong balance sheet. They're in tremendous debt. Do they have cash flow? Yeah, but it's not nearly enough. Can they fund their debt? Yes, for the time being. Will they be able to? Yeah, the street's looking at so much additional revenue from Oracle. Let's see how the numbers look right now at Oracle, because the street is expecting so much growth out of them that
they miss. Is that what you're thinking?
No, I mean, look, they're expecting them to report, when they report tomorrow, a 16% year over year increase. All right. Next year, grow revenue by 30%, and then accelerate to 48% the following year. And this is not two analysts. You got 39 analysts for next year, which is coming right around the corner because their fiscal year ends in Q1. And then the following year, which is really 2027, you got 31 analysts. And then after that, you have 9 analysts saying 44%. So Oracle is going to go from 67 billion of revenue to theoretically 183 billion over 3 years. That's a tremendous amount of revenue generated over a 3-year period, in addition to the increase. And then when I look at the earnings, look at this earnings spike. This year they're expected to do 734. Next year 793. Not a big spike there. And then 1078 and 1594. I mean, if that actually plays out, Oracle is so damn cheap. And as long as they can finance the debt, it's going to become another Verizon situation with the debt. Oh no, they have 100 billion of debt. Well, they also do 50 billion of EBITDA, Verizon. So can they spend 6 billion a year on financing debt? Yes. I don't know. I want to see the numbers tomorrow because the balance sheet's not nearly as strong as the other hyperscalers. But once again, it's Oracle. Do we think Oracle's really going away? No. So is 155 cheap for long-term investors? Maybe.
Is there a price point you would enter, or you just have so many other things?
I'm getting interested in moving my service now money into that. Like I'm hoping, like I shouldn't say it like this, but I'm going to, and everybody knows I don't do a good job of having a filter, and I kind of don't give a fuck a lot of times and whatever. If Oracle sells off big time tomorrow after hours, I'm likely to step in and take a position. And
Is
the
it
reason
tomorrow, or is it? I thought it was next week.
you said it was tomorrow,
I thought it was the 10th.
310. So next week.
Yeah.
If they sell off big next week, I would likely come in because to me, all right, let's say it goes down to 125. Is it really going under 100? Maybe, but I think it's a low probability.
I mean, just use the numbers you just brought up, right? It goes to
Yeah.
125 and it hits that EPS number. You're trading it 12 times. I'm not smart with math, Steve. You got to help me here. But
No, I mean,
12 times 2028, 2029, like
to me,
less than 8, probably 2029.
Yeah, 6.5,
Price
7.
Price to earnings, not price to EBITDA, not price. So the cash flow is going to be much greater than that because of think of how much depreciation they have.
Yeah, Oracle's interesting here, but I don't want to own Oracle over Amazon. But if they get a big dip after earnings because everybody freaks out about and this is what I think is going to happen. I can see a scenario where their Capex spend is going to be so much because we're seeing what happened with other hyperscalers that everybody's going to go nuts because of what their debt load looks like and their debt profile and their balance sheet, that this could have an overreaction to the downside and then rebound in a week. But I would say, you know what, at a certain point, I'm willing to take a long-term position on Oracle and hold it for 2 to 5 years. I'm going to answer a question real quick. So somebody said, do you not have a cash position, Steve? Feels like your dry powder is burning a hole in your pocket. I always have a cash position.
Speak better than me about that. Yeah.
I keep money on the sideline for these reasons. Like I always have capital that's not invested.
Yeah, you're much better than me about that.
And if I need to raise capital, I can sell calls. I can exit a position. You know, I'm just saying that at some point Oracle becomes way too cheap.
See, this is the thing that I dislike sometimes when people are like, so no, Steve, you just said that. So why not wait until it's below 125? What if it never gets there?
What if it never gets there?
This is the problem that I have. Like people are always like these, like no offense, and I don't know if you're new. You know, I'm not trying to call you out specifically, but I see that all the time. Sometimes, if you think about it, if a stock you honestly think, let's just say we think that Oracle's going to go to $500 eventually. Let's just say, I haven't really thought about it, but let's just say, and you're like, it's going to hit 125, man. It's like, well, say it hits 135. Just pull the fucking trigger.
Yeah.
What's the difference, right? So the difference is you might have 8% more shares or whatever if you wait till it goes from one. Not even. You'd have 6 or 7% more shares if you waited for it to go from 135 to 125. But what if you don't get in at all? And it does go to 500. I've seen this happen so many times where people are so hyper focused. Now, if you're a trader or something like that, very different. But if you're talking like, oh, I'm buying it because it's eventually going to get a 500, that'd be like me saying, Steve, I don't think I'm going to buy Amazon here right now, Steve, because it's trading at what's Amazon today? Steve, I'm not going to buy Amazon, Steve, because it's at 218, 220. I'm wait till it goes below 200. And then you would ask me, you might be like, okay, Matt, but you think it's going to 1,000, right? I'd be like, yeah, it's going to 1,000. Like I'm very confident that in the next 10 years, it'll be $1,000 a share.
I mean,
probably before then.
Look at Zeta. I started a position around $20.20. I said I'm buying 1,000 shares. I have no idea what it's going to do. I'm a buyer up to 25, and I'm a buyer down to 15. What happened? It went up to 24, and then it went down to 14.96 or so. And what did I do? I bought the entire way down. And my average price is around 17.50 or something like that. So I always say, I don't make a full position out of the gate. I get a starter position going. And then I don't care if I'm adding to a position going higher. That's the best scenario you can ask for because it means you're making money the whole time. But you have to be willing to, if you believe in something and you have a strong thesis, you got to be willing to dollar cost average into something. It's why I do things the way I do it. I make a range. This is my buying range. I don't care where it goes in the short term. I don't care if I'm down 10% or 15% or up 10 or up 15 if I believe it's going to double or triple. Why would I care? I want to own more shares.
Yeah. No, I mean, and I'm not saying like just buy any stock at any price, right? I mean,
right.
you have to have a line, but I see so many people trying to get super greedy on some of these things, and I'm just like, at some point, just buy the stock, like, because they're going to be the same people that complain and on X being like, "Ah, bro, I knew I should have pulled the trigger." I think sometimes it's just better to be invested than not at all. Especially if you're just, you're trying to nitpick. It's like, bro, like, stop, like, get your 4X, get your 400% return. Who cares if it could have been 420%? Lock it in. That's the way I look at it. I'm not that smart, Steve. So when it comes to like, am I going to be actually outperform? I'm just like, dude, it's the market's giving me this now based off what I'm seeing. It's going to $1,000 a share from 218 to 1,000. Who cares?
Yeah. No, I'm
versus
with you.
200 to 1,000. It's like, what am I trying to do? I'm not trying to split hairs. I'm trying to guarantee, move on to the next thing.
Look, you know how I feel. If you really believe something's going to 1,000, and using Amazon's a great example because over 5 or 10 years it could. So yeah, you care about $1 or $2 on the share price. Like you can't pick a bottom. Nobody can. I'm telling you, I've known a lot of people. Okay, known a lot of people that are investors. Okay, I've never met anybody in my life, and I'm not saying there aren't people out there. It's probably very low percentage. Jason, if he's in the chat, I haven't seen him. He would know better than me. I've never seen somebody that can pick perfect bottoms and pick perfect tops. I've never seen it. Can you get lucky once in a blue moon? Sure. Do I get lucky sometimes in the timing of articles when I have a thesis? Yes. I don't know that that's a bottom or a top, though.
Mm-hmm.
You know what I mean? Like, you can't accurately say, this is the bottom 100%. Like, do you have a gut feeling? Did I have a gut feeling during Independence Day, the 48.30, whatever it was? Yeah, but it could have went to 4,000. I don't know. Just because I think something's going to happen doesn't mean it's going to. But if you have a long-term thesis, just like the S&P, why would you not just continue to buy the S&P? Over time, you're going to get a great average. You're going to buy low. You're going to buy high. Over time, it has a historical history of just going up.
But and another piece that I wanted to iterate as well. Like I said, I'm not advocating for buying at all prices, right? But what I will say is be okay with buying at all-time highs too. We might not be in the situation but I see a lot of people like, but it's at all-time highs. It's like you're going to experience a lot of all-time highs, right? The S&P 500 is literally its whole history is all-time highs. Like you can measure the amount of all-time highs that the S&P 500 will achieve in a year most of the time by over 20 times. Very frequently, you end the year with over 20-time new all-time highs on the S&P 500.
Yeah.
Sometimes it's been over like 50 times. I've seen it. So when people are like, stocks at all-time highs, it's like, well, there'll be another one next week. Literally, if you think about some of these, I don't remember what if it was 2023 or 24 or 25. There was over 50 all-time highs. So it's like, you mean every week there was a new all-time high, and you're concerned about I shouldn't buy an all-time high. Come on, man.
I mean, I don't stop my contributions to the S&P because the market's at an all-time high. I don't stop my contributions because we're in a pandemic and the market's free falling. I keep buying, period. Because I don't know what's going to happen. But, well, listen, that's what makes a market, right? You need people to be sellers so you can be a buyer. That's what makes a market. Anyway, let's get to Netflix. Let's get to Lena's favorite stock. I don't actually know if it's her favorite stock, but I do think she loves this company. I think Chels is in it. I think a lot of people in the community are in it. Did you see the news with Netflix today?
First and foremost, before we start, that Kryptonite said there was no all-time highs in 2023. That's wrong. Sorry. Well, did I see the news on Netflix particularly?
Yes.
I saw the Warner Brother deal fell through, so they're getting what happened specifically.
Netflix purchased. They made a dangerous move. Okay, they purchased an AI company that was built in secret and founded by Ben Affleck. Company is called Interpositive, and it's a proprietary AI data set, and it helps with the it takes raw footage from a film shoot, the dailies, and trains a custom AI model on it. And the model can then relight scenes, reframe shots, remove stunt wires, fix missing angles, color correct entire films, and add visual effects. This fits into my thesis that I believe, and I wrote a tweet about it today. I actually haven't seen if anybody responded or not. This is what I said earlier. Netflix has it. Wow, a lot of people viewed this. Netflix has agreed to acquire Interpositive, an AI filmmaking technology business founded by Ben Affleck. I'm so excited because as this may put us one step closer to being able to prompt screens, episodes, and seasons. How much would you pay per month for a Netflix subscription if you could make another season of a show you liked that ended? I can tell you that I personally would pay significantly more to be able to have new content built of specific shows. I would also love to change the ending of The Sopranos. I still remember calling people and getting calls asking if your cable went out. So if this becomes the future, I'd pay $49.99 a month for a Netflix subscription.
So you think that you've been talking about this for a while. So you think this is actually going to happen? And I want to stand corrected. The gentleman that was saying that there was no all-time highs in 23, you're right. But it went from basically no all-time highs in 23 to blasting past 6,000 in 2024. So,
like, you know what's funny? Somebody said to me, Steve, you are dreaming. Do you think SAG/AFTRA, I don't even know what that is, would let this happen? No. Got news for everybody. They may. It's called licensing likeness. You think that these actors and actresses aren't going to license their likeness?
Steve is what we call a time traveler.
So, yeah, I think that this is the future. Do I want a new ending to Sopranos? You bet I do. Do I want another season of The Unit? You bet I do. Do I want Sons of Anarchy to change their ending? Absolutely. Do I want Game of Thrones to be redone because half of the show was just under par? Yes.
How would you change the ending to Sopranos?
Oh, I certainly wouldn't have a white fuzzy screen and make everybody think their cable went out.
First and foremost, it was black, but the
Was it
so I don't
black or
know,
was it fuzzy? It went fuzzy, right?
Steven,
Was it black? Whatever it was.
you're better than this.
Whatever it was. I haven't watched that.
Steven, you're better than this, Steven.
Anyway, I would want a complete.
If it went white, people would have not. It wouldn't have been as much of a debate because people would have assumed he went to the afterlife or something. But it was just a black screen, so everyone thought it was
fuzzy thing, like when your cable goes out and the screen just gets fuzzy.
No, that's just the intro of every HBO show.
No, I gotta find a back in the day thing, like when you whatever. Anyway, either I would have liked them to actually show him getting his or I would have liked something else. Certainly not him sitting at a diner with his family, and then you have no idea what happens. Show us what the hell happens.
What do you think happens, Steve?
I mean, didn't David Chase say at some point that he got murdered? Or am I just misremembering that?
I don't think he ever said it.
He implied.
I think he kind of implied.
Yeah, I think he implied. Yeah. So there's a lot of shows. Like, okay, for Netflix, The Recruit, 2 seasons. Both seasons were great, and they never made a third.
There's a couple shows like that.
It's very annoying, at least with this upscaled package that they may be able to charge for in the future. I would pay for that. There are shows that have unfinished business.
Did they film an alternative ending, Steve?
I have not heard that.
Is there? I feel like that's Fugazi, but I mean, I wouldn't be surprised.
I have not heard that. I cannot confirm.
I'll never forget. Apparently, I forget what the name of the therapist is in real life.
Dr. Melfi?
Yeah. Well, I forget what her actor's name is, but Dr. Melfi and apparently Jim Gandolfini were watching it together, and they were both like, what? Anyway.
Yeah, I don't know.
Yeah, a lot of people liked Firefly. I don't know. Yeah, so that's interesting. So how much was this deal? You mentioned it.
They didn't say how much it was, but it was a big deal because of what they can do. And I think that Netflix is going to run back to 115, 120. I can definitely see it happening. I think they're better off without Warner Brothers because at the end of the day, how much is this Warner Brothers deal really worth in the age of AI?
You said that the other night. I didn't really think about it, but you got me kind of thinking the other day, like how much is IP these days?
Yeah.
Like, I don't know. It's tough, right? Because it's like you can't recreate a Mickey Mouse, but at the same time, you can forget about a Mickey Mouse. And same thing with like some of the Warner Brothers. Like if you think about the old school Warner Brothers IP, a lot of that stuff's gone to zero in terms of like people remembering it. But there's some newer things that obviously Warner Brothers has acquired over the years that make it extremely valuable. So I don't know. It's tough, man. It's tough. Like how much? This is the thing. It's just like in 30 years, unless there's some more Marvel like writing and stuff, like is Marvel even going to be really worth it for Disney? So you start to think if this
licensing to Hasbro for the action figures has got to bring in some revenue.
I don't know. Oh, okay. I thought that for some reason I thought they just bought Ben Affleck's thing for $2.8 billion. That was the walkaway money. I was like, God damn! It was like the 2.8.
Wouldn't suck.
I mean, Good for Affleck. I mean, I think some of these actors, man, they do a good job. I mean, granted, I'm sure being actors, they get to meet the people that are financing some of these movies. They get to meet a lot of really intelligent business people. So,
yeah, I don't know. I think Netflix is very interesting here. I think it's a better company without the Warner Brothers. I think Warner Brothers got too expensive, and they basically just made several $billion to do a bunch of due diligence work and pay a bunch of lawyers and bankers. So even if they had to pay $500 million in legal fees and consultant fees, they're still walking away with billions in profit for doing basically nothing.
so what do you think is next? So, like the NFL Christmas Day. So, I think you were right onto something about specifically sports being the next frontier, because like sports is decoupling from the ABCs of the world, right? So they're getting onto these streaming platforms now because they know it's the end for normal cable, right? So I think you hit the nail on the head the other day, specifically talking about that. So let's run through the deals that Netflix has acquired. It's actually way bigger than I thought, because you mentioned it, and I was like, well, other than WWE, I was wrong. So WWE $5 billion deal starting in Raw in 2025. I actually should watch that, dude. That'll bring back some probably good memories if they do it well. I remember like the Stone Cold Steve Austin days, like that with The Rock kind of just coming out. And I remember when The Rock kind of looked like nerdy, and then he became like the guy, like Dwayne The Rock Johnson kind of guy, like big, powerful personality kind of guy. Christmas Day NFL games for 3 years. FIFA 2027 and 2031 Women's Championship or Women's World Cup. Sorry, exclusive rights to MLB, including opening day. Boxing, they do the kind of one-off fights. I remember the Tyson. Was it the Tyson Paul fight that was super buggy? I'm trying to remember.
I think so.
Yeah, it was kind of buggy. Oh, this is a new one, Steve. They're streaming the Canadian GP in May 2026, which is kind of an interesting deal because, well, maybe it's just interesting for me because I buy F1 TV because I'm a loser. It's like $80 and you get to see all the, whenever you want. And I'm normally a guy that like not going to wake up at 4 a.m. on a Saturday, but I definitely want to still watch the race. Okay. The first ever MMA event featuring Rousey versus Carano. When the hell was that? When did I miss that, Steve?
5 weeks, something like that.
Oh, it's 5 weeks from now. Okay.
Yeah. And I don't even want this to happen. I don't even think Ronda really wanted to take this fight. I think she's just taking it because she wants to help Gina Carano get back in shape. I mean, that's what I think she said. Maybe she said she would do anything for her, but she was the true pioneer, and if she was the only person she would come out of retirement for. I mean, this isn't even going to be close. Ronda is going to destroy her.
Rousey's a wild chick, dude.
This is not going to be Holly Holmes outboxing her and then hitting her with a left roundhouse to the head. Look, Gina Carano's Muay Thai. She could definitely catch her. I think the reality is more Ronda looks great. I saw some training footage of her, and she's a Olympian in judo.
Is she really?
Yeah, bronze medal Olympian in judo.
Okay.
I read her book. You know what her mom used to make her do?
Nah.
So she had an autobiography. I read it. So she would go to practice and she broke her toe and she wanted to stop practice. And her mom made her run laps on a broken toe. And so her mom was a black belt in judo, like ton of very highly decorated judo practitioner. And she said, if you break the toe in Olympics, that's your only shot. Start running. I think about the mindset you have to have.
She was born in 87, so she's getting up there. 39 for a fighter is pretty.
Yeah, but they're both roughly the same age, I think. I mean, it's not like one's 25 and one's 40.
I see? So I'm seeing Ronda. I'm not seeing.
But regardless, I think Netflix is going to get into live sports more. I think they should start buying teams. I think they should start with buying MSG and buy the Knicks and the Rangers through it. I think they should buy the Atlanta Braves. It's a publicly traded company. Buy Manchester United. Take all that off network TV and put it right on Netflix.
Those are big brands.
Uh,
Big brands. I mean, did you see? This is another thing that I'm seeing now. Is this real? Mayweather Pacquiao rematch?
yes, they're fighting on the. I'm pretty sure. So Ronda Holly's on one of those cards with Mayweather. Mayweather's got 2 fights. He's fighting Tyson. He's fighting Pacquiao. Mayweather wanted to be an exhibition. Pacquiao said no, no
Wait,
exhibition.
Mayweather's fighting Tyson?
Yeah. I will tell you right now, from everything I've seen and heard, it looks like Mayweather's got real serious financial issues. He's in a ton of lawsuits. And it seems like this is just a money grab at this point to get
Lawsuits
himself
for unpaid.
I have no idea. Supposedly, he's got a ridiculous amount of money tied up in real estate and assets, but not the liquid cash for certain things. And that's why he's doing this. I mean, he's putting, what is he, 50-0? He's putting a perfect record on the line against Pacquiao. That's dangerous. Like, I really do think Pacquiao is going to win.
I thought Pacquiao should have won the last one, honestly. But
No,
not for you.
Times. Oh no.
Yeah. No. Okay. Maybe it's my bias and wanting to get. I don't know. I think Pacquiao could have shut up a little better, but I still think he should have. Congo location. They were going to do it in the Congo.
I mean, regardless, this is bullish Netflix. All these live sport events are going to be bullish Netflix. I think they need to lean into this. And I'll tell you what would make sense. And I don't know if they can do this. Go buy TKO. Tell Paramount F you, rip up the contract, even though they can't, and put the UFC and WWE straight on freaking Netflix and own both the brands.
You know what I think they actually should do, Steve?
Let's hear it.
They should buy like a Big Ten. Or like, I don't know if you can do that, or buy like an SEC. I don't know if you can. I don't know. Sign the official rights to it, whatever. Not buy it. You know what I mean? Like get the official rights specifically for particular.
Oh, I mean, yeah, they could definitely buy the TV rights for the Big East or the Big Ten or the ACC. Yeah, I think that'd be great.
Specifically now and get in good.
Yeah,
I mean, because it's only going to continue consolidation. Like the Big 12 fell apart.
well, it would make sense because
Pac-10 fell apart.
Then they could do reality shows with the colleges, Hard Knocks for the college teams, stuff like that.
Or maybe not Big 12. Big 12 didn't fall apart, right? It was Pac-10 that fell apart.
Pac-10 and the Big East is not the Big East anymore. It's garbage. Yeah. I mean, I remember when St. John's was like the team. Villanova was the team.
Shout out Villanova. I've been to many of those Villanova basketball games with my dad growing up. He was a Villanova alumni.
I agree with you, but getting the rights to one of those very big outfits, I mean, the SEC would be great. You get the 2 main sports, football and basketball. You get all TV rights.
Big Ten's up to 18. Yeah, I guess all the Oregon. Yeah, Oregon, Washington, UCLA, USC. Yeah. I remember it was a big deal when it went beyond I think we brought Rutgers in and it went to 11. And everyone's like, what the hell's going on? I don't know, Steve. Then I'm curious. I mean, I don't know. $400 billion company, though. I mean, but I don't know. I mean, you think about it. If you get cricket, you get, like you said, soccer, internet, football, actual football.
Yeah.
Some real revenue there.
Yeah.
So can I ask a stupid question, Steve? So what are we missing, man? So we got AI, we got robotics, we got the data center piece.
QXO, man.
10 years time, construction's not going away. QXO.
Home builders. I mean, you're going to see more building as rates come down. I'll tell you, I was buying more Starwood last week. I think people are really sleeping. Starwood at a 10.78% yield. Get out of here.
You're not wrong. I mean, I don't know if you just pulled it out of my head, Steve, but I don't know if I was thinking about that yesterday or 2 days ago. Because I'm luckily every year I get a bonus, and I was thinking about that, and I was starting to do some math, and I was thinking, because it was in the 18s, right? And so it's 48 cents every quarter for a dividend, so just under $2. So I was like, so that's like $1.92, I think I said, and I was like, it's 18, so I was like, it's over 10%. I'm like, I mean, quality assets.
You just plow it back in every quarter.
But it's ordinary dividends or ordinary income, right?
So what? You're making money. Why do you care about what your tax rate's going to be on it? You're legitimately making money. I never understand that when people go down that road. I hate paying taxes, but I love paying taxes. Because if I'm not paying taxes, that means I'm not making money.
Well, I'm just trying to think. I don't know. I'm like, not that I need.
Let me give you some stats. So Starwood's board just authorized a $400 million buyback program of its shares and convertible notes over the next year. On the earnings call, management discussed how 2026 will be another robust year for originations, which will consist of 1.9 billion of unfunded commitments and produce additional earnings. In 2025, Starwood deployed 12.7 billion of capital, with 4.25 billion in Q4, which brought their total underappreciated assets to 30.7 billion. I'm sorry. This company is so disrespected because of the sector it's in. Barry Sternlich is one of the best CEOs in the game, and it's got more than a decade of paying this dividend through the pandemic, through the high inflation, through the banking crisis. Never once has it not paid or cut the dividend.
The reason why it gets a bad rap, Steve, is actually a pretty interesting chart. So I think the reason why it gets a bad rap is because they pretty much pay out all their appreciation via the dividend.
Yeah, they're a REIT. They have to pay out 90% to keep the tax status.
Well, no, not even just that, but I mean, I think that they pay, a massive. I mean, so the price doesn't really increase in the stock. Really, it's just the dividend that you get. So, like since 2010, sorry, I spit. Since 2010, it was $18.90 a share, $21 a share. So it's been flat for the past 16 some years, but it's been paying out. I don't know if it's been paying out 48 cents a quarter since 2010. I don't know when that 48 cents, but it's been flat at 48 cents for like almost a decade, if not more. Since I've been
I'll tell you when the dividend started lower. The dividend was 10 cents a share. And then over the next year, it went to 44 cents, and it's been 48 cents since the beginning of 2014. If you want income, like, look, Starwood's not going to 40. Okay. No. It's not going to 40. You're going to get your dividend every quarter like clockwork.
I mean, dude, if you're a retiree and let's just say you're one of those people that somehow is getting that. Because what is it now? What do you not pay taxes up to, Steve? Now that we have the new standard deduction?
40?
Is it 40 and these start
40 married, I think.
At what point do you start paying income tax? For 2025, if you go above 15, yeah, but then there's a standard deduction. So what? Basically, yes. This is the hard part. Is like you always have to pay some sort of tax, but then you get a minimum deduction. So at what point is that crossover? And people are always confused by this. Like, singles 46,000.
There's a lot of companies right now that are very interesting for a lower rate environment. And the other aspect of Starwood is as rates come down, their properties should increase in value. That should make their assets increase, should make their book value increase, which should drive the share price a little higher. There's a lot of things set up for this.
Yeah, I think it has room to benefit.
Yeah.
Do you think they're going to pay special dividends with the cuts?
I don't know. They don't need to. They pay 10.5% is such a great dividend for something that has this history.
Kind of household.
So I don't know. I like them. I'm seeing Rusty put QQQI. I love QQQI. I'm seeing Chels put SCHD. I'm lukewarm on SCHD. I still own it. I like QQQI a lot better. I'm a big, big fan of QQQI. Yeah, I own EPD. I like EPD.
The thing is, so one thing that I wish somebody told me to do is when I was like 10 years ago, when I was really first getting into this, is read the prospectus. Like, because I don't think people fully understand. Sometimes they just jump to conclusions. They see that it says QQQ, and then they're like, oh, it says QQQ and QQQI. So it must mean that the underlying performance is going to match, and I'm going to get this like 10% dividend, Steve. So I'm going to end up with like 25% a year. And it's like, no, you know what I mean? Like, yeah. And so I had a lot of people back in 2020, 2021 when these these option income ETFs started to get popular. The Jeppies of the world, the QYLDs, and et cetera. And I was like, guys, it's very unlikely you're ever going to outpace the S&P 500 with some of these funds.
Yeah, those funds are not made to outpace the market. They are made to generate, like QQQI is made to generate roughly an 11 to 14% distribution. And if the market goes up, give you a couple of percent a year in appreciation because it does a call spread. Unlike QILD, unlike Jeppy. Jeppy used to be very good until all these other companies came out with better stuff. Jeppy's still good, but it's not as good as SPY or QQQI. So they write, a lot of funds do a full overwrite strategy. Jeppy will buy exchange linked notes with 20% of the portfolio, leave 80% uncapped. QQQI and SPYI, they write covered calls against the index, even though they own all the underlying assets. Gives them a better tax advantage 60/40. The other thing that they do is they retain a portion of the premium and buy out of the money call options. That allows them to participate in some of the upside if the market rips. So it's a much better mousetrap than a overwrite strategy such as the Global X funds, because if the market declines a lot and then whips back the next month, an overwrite strategy, you rewrote your set of covered calls lower. So now the market rips, your fund's staying there. But with QQQI, you have the out of the money call options that helps it appreciate and rebound.
No, I mean, I see these people, trying to get to a place where like, oh, this thing's going to yield 15 to 20% a year. So then I only need $1 million and I'll, $1 million and I'll be 150, 200 grand a year. It's like your portfolio is going to get cut in half. Like, I'm not trying to be that guy, but at some point you're going to be so exposed to the downside and your, this is the problem. The QILDs, XYLDs and stuff of the world, they're capped to the upside. And they're exposed entirely as the S&P 500, just the same to the downside. So it's not a collared ETF, right, where they buy puts or anything like that. So what ends up happening is your money gets cut in half at a black swan event, 30% or something during Liberation Day, and then because it's capped on the return, if it goes up 5-6% in a month, it's not going to be able to capture all that. So in the event of that happening, go to the regular index, right, and get yourself to a point where you're not capped in anything, because otherwise you're just going to be sitting there in a capped fund and collecting so it's like you won't experience the V-shaped recovery. You'll experience some of it, but not all of it. But as always, the thing that I'm most concerned about with respect to the prospectus is a lot of times people are trialing and error things. I get that. I understand that. You're trying to learn the market. You're trying to make informed decisions. So you're throwing a little money, sprinkling money there, here, there, yeah, everywhere. The prospectus, I think, will help a lot of people understand whether or not, and this is if you have a strong sense of plan as to what you're doing with your financials. If you sit there and you're like, oh, I have a strong sense that this is what I want to do, that's what I want to do with my capital, and you read your prospectus and you're like, what do you mean it's I don't know, triple leverage, this, that, and the other? And you're like, I didn't know it was triple leverage. Why would I get into something like that, right? So to me, I think that a lot of people should do a lot more reading of the prospectus to not just hear what's fancy and what everyone else is getting their money into on X these days or on YouTube. They need to sit there and understand, why am I investing in this? Is this just because somebody on YouTube was talking about it? Like, remember all those yield max funds that everybody was touting about, and now nobody's talking about them? My thought process is like, had people fully understood what those were all about and read the prospectus, maybe they wouldn't have, unfortunately, made some of those mistakes and ended up down as much as some of them have, unfortunately.
So I still own one. I'm still in the strategy one, and I have not run the numbers on where I am. I don't know how much income it's generated. I stopped tracking it. I feel like I've generated 60% of my original investment in income, something like that. I could also be wrong. So I will run the numbers and get back to you next week.
Yeah, I'm curious. I'm very curious.
Actually, I could probably do it right now.
And I'm not saying that cover call ETFs are bad. I'm not saying that at all. I think that a lot of people just need to recognize, because there was a lot of people assuming that these cover call ETFs were, in total return, we're going to be achieving 25%. I remember hearing that number a lot in 2021. A lot of people entering the market assuming the S&P gives this and XYLD gives 12%. So there's potential you're going to get above 20% annualized. And it's like, that's just not realistic.
No, it's not.
So I'm just trying to make sure that people don't get themselves in that situation. And I touted the same thing when Yield Max came out. And a lot of people were upset because they were assuming I was trying to fearmonger and get clickbait and all that. And it's just like, look where a lot of those yield max funds are.
Yeah, I'm pulling the numbers right now, so give me a minute. All right.
Look, and I don't think BM&R is a bad trade either. There's some people talking about how BM&R, it's like, I think BM&R is great as well, but I didn't think at the price that it was people were going for, at the time, I stood out, and now I'm a shareholder, and I wouldn't mind trying to accumulate. And I think it still potentially has risk. I'm not saying it's riskless, but I just thought the end of the crypto cycle was long in the tooth, and I just happened to be on the right side of that. I'm not saying it's some sort of oracle or anything like that, but yeah, I remember people dragging me in the community when I was talking badly about you. You don't know what you're talking about. Now I don't hear anybody talking about it.
Well, this is what I said. I said that I was going to buy it. I understand the risk. I understand what it does. I wrote 2 articles about it. I said that it creates a synthetic position. It does not own the stock. And by creating a synthetic position, it allows Misty or the other ones to buy more options on it and create more spreads. Because they're not buying it in share blocks, they're doing the spreads off the options. So I don't know how many shares I bought, but I am down. On a capital appreciation, I am down 63.98% on the equity. But I have generated 47.64% in distribution, so it's a little less than I originally thought. And my current position, when I look at the distribution income and what the equity is currently worth, I am down 16.5% on it. Eventually, I'll get my money back. Eventually, I will be made whole, and eventually, it will make me money. And I think I bought it June of last year. I don't think it's been a year yet.
That's Steve.
You have to, with those things, you have to be willing to sit through the pain and the downturn. Like, you can't own these high income things and get scared when it goes down. Like, you're buying it for the income. You're not buying it for capital appreciation. And also, don't buy it with money you can't afford to lose either. Like, this was a pure experiment for me. I threw at it what I was willing to lose. It's a pure experiment.
What's the yield on it now, Steve?
I have no idea what's the yield on it. They went to weekly distributions. It's so ridiculous. 272%.
That's on the trailing. I mean, what's the forward?
It's on the trailing, yeah. The last dividend was 35 cents. So let's say they do that every week going forward. 18.2. Oh, no, 70% yield. Hold on. Yeah, 75.5%.
I'd be curious to see if you end up.
As long as it doesn't go under, I'm going to end up because I can afford to hold it indefinitely. Like, I don't have to sell. It's not like I'm getting stopped out of a position. So I'm gonna make my money back as long as the fund is still there. The question is, once I get that remaining capital out, am I just gonna hold the underlying equity and keep letting it produce income or not? I don't know. The yield is not nearly as interesting as it once was. And my original premise was, let me generate 100% of my equity. I don't care where the underlying equity is, and then it's just free rolling income. The investment case has changed significantly. They changed the metrics. Bitcoin is down, MicroStrategy is down, and this investment is just not working out. So once I'm made whole, I'll make a decision on what I want to do.
Oh, there you go. So I've seen a couple people. I just want to address something. So I've seen a couple people talking about VG in the chat. I'm very happy that a lot of you guys have made some money. I know some people that bought during the IPO and never averaged down because they were afraid because I personally have always been in VG because I know that it's going to be over $100 billion company, and I thought it was very easy. Turned out to be very difficult to get there, but I thought it was going to be easy because I thought people would see what we're seeing now in 2026 and we'll be seeing in 2027. Keeping in mind the stock literally went IPO in January 25, so it's not like I was like, oh, in 15 years it's going to be. It's not like a next decade where I'm like, you have to wait. I mean, this company has been producing income since day one. Since 2022, it's been producing income, and they went public in January 25. So I thought the market would have priced in things that are going to happen in 26 and 27. They did not. And so I would not fault people for taking profit here if they're up, whatever percentage. Congratulations. But I also think that there's potential for this thing to go over $100 billion market cap without any sort of thinking about buybacks, etc. That's a 3x from here. And so, you're going to go from a $30 billion market cap as it is today to potentially $100 billion, probably even more by the time you get done some of the additional stuff that they're doing. So it really just depends. So people wanting to know my thought, if you're a trader and you're not trying to wait and you're afraid the stock's going to back down to $6 or $7, I would say take your money and run. There's all likelihood that this stock could go below $10 again. Just being point blank on it. And I think that it's going to take some time, end of 27, before we see another large leg up in the stock. Now, I could be wrong on that piece, but just want to be realistic. And for the people that are hanging out on Next, no revenue has been generated yet. So I'm anticipating the next 18 months. That'll be a very interesting ride. And the floor will start to come in on Next starting in 18 months or so. So different stock, different sort of stock, different comp. I mean, similar industry, but different position, right? Venture Global was where Next Decade is back in like 2019, so like 5-6 years ago. So you just have to recognize what you're getting yourself into. Just because Matt Money's buying a stock doesn't mean it's right for you. You kind of have to have your own. Like, oh, that sounds like a cool, interesting position, but doesn't really fit into my wheelhouse or doesn't really fit into like XYZ. It's okay to say, you know what, Matt? Like, just how like I give Steve shit about Rocket, but like I like it wasn't his thing. Like, I get it. Like, I'm not, I can poke fun, but like I'm not gonna be like, dude, I can't believe you're an idiot. Like, blah 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 blah. It's like, dude, you don't understand what you don't know. Like, so there's a lot of stuff that Steve gets, like in Zeta. Like, if say Zeta goes up 200%, I hope Steve wouldn't be like, Matt, you're an absolute idiot for not investing in Zeta. It's like, dude, like, I don't know. Like,
No, you make money elsewhere.
Yeah, you make money elsewhere. And you also, another thing is like, you can't invest in everything as well. And that's why, like, and so that's part of the love that I have with Steve is like, we'll see things eye to eye sometimes. Like SL Green, I was like, this is an absolute no brainer. And that's part of the reason why I think Steve, like, I was like, this because Chris was kind of talking to me, because I've kind of know Chris from doing Palantir Weekly, and I never really knew Steve at that point. And then Chris is like, actually, I got a lot of this information from Steve, and I think it was because SL Green, I started trickling in with Steve a little bit more and like following him, and then obviously the things have kind of taken on its own. But it's like you can agree with people on certain things and not agree on others and still be right. And sometimes it goes back to that Warren Buffett quote of like, imagine you're a baseball player and you have 10 strikes, but you don't get caught looking, meaning like you don't have to swing the bat if you don't want to. You can just wait there all day until you find the one. And if like actually people, Buffett actually said he thinks that people would be better investors if you only had 10 swings or whatever, something like that. And you only got caught a strike if you had 10 swings and you missed all 10. But if you were able to swing and only take 10 investments your entire life, you'd probably be a better investor because you'd actually think the things through rather than just hearing it at the water cooler or hearing some random dude in Houston talk about some company. Because one, you can't buy conviction. That's something that Tanner always says, which I think is absolutely genius. I forget who he borrowed that from, but like it's so true. You can't borrow conviction. I'm in the oil and gas industry. I get it. Like I'm not a genius, I'm not an expert, but like I get it, right? In certain areas. So I can't make you sit there and understand what I know. So it might not seem like I don't know. It's, what you know, right? Like, and sometimes as well, that could be a huge issue because you might have a very focused, you might think, oh, kind of like what's the word? I don't know what the fallacy is, but it's basically if you have such a good confidence, like you might completely just think, oh, I can't possibly be wrong. I know so much about this. I know so much about that. The market will find a way to humble you regardless. So anyway.
I agree. Everybody has to invest for themselves. Can't own everything, even though I want to.
Yes, it's like that was something I made a mistake on very early in my career investing, 10, 15 years ago now. It's so fun, Steve. Like nothing would make me happier than to just be like, Steve's talking about Zeta. That looks fun. Let me buy some. And for a while it was fine because it was just a hobby. And we were talking like 100 grand. Now we're talking a larger number than that. And it's like at that point, if I miss money and I'm having fun, like if I miss out on making 10 grand and I'm still having fun versus not making 10 grand and I'm not having fun, if I said that right, I'm okay losing 10 or not the opportunity cost of not having that 10 grand by investing in the right thing, as long as I'm having fun. What I'm not okay with is losing 6 figures because I'm having fun, but not investing in the right thing. So, I once the portfolio got large enough, I was like, you know what? No more 20, 25 positions. I need to focus on what I know, focus on where I can control more. If it ever starts to feel unwieldy and I can't keep up with stuff, then I need to get rid of some positions. And so you'll see me enter some small auxiliary positions. Like I did that with SoFi, I did that with Nubank. It's not that I dislike the companies. It's just like Steve said, sometimes you just want to get rid of something and buy something that you have more conviction in. So, like his service now.
Yeah. I mean, I have a lot of conviction in it, but on a day like today, where it rips so much, it's like, yeah, I'll exit and I'll buy it back if I want it. Let me lock it in. I can always unlock it. That's the beauty about investing. I'm not playing a game on investments and making decisions whether I have to pay long or short term capital gains tax.
Steve, does SoFi get into the S&P?
That's the question for tomorrow. Is it getting in? I don't know. Noto backstopping it. I don't know. We'll see. We will see. If it does, I'll be very happy. A lot of people will be very happy. But if it doesn't, that's okay too. It's going to be, listen, SoFi is the same company come Monday, whether it gets an S&P tomorrow or not. Nothing changes with the business. Is it going to be nice for validation? Absolutely. Are we going to get in? I got no idea. I don't make investments based on if it's getting into an index. I hope we get in, but I don't know.
Steve, I think that some people might say, take these broken
Cake?
wings.
Oh, I thought you said cake like Cheesecake Factory.
I mean, Steve, don't get me excited like that.
I'm just
I
saying.
haven't eaten, Steve. Okay, I'm hangry. I had some crackers at lunch.
All right, maybe we should end it so you can go have dinner.
What did you have, Steve? Inspire me. I had 200 calories worth of crackers.
Chicken tenders?
Ooh, honey mustard?
No,
Not a honey mustard guy?
not a honey mustard guy.
What about buffalo sauce?
I get down with buffalo.
Do you do chicken tendies with buffalo, or
No,
covered or dipped?
No ketchup today, but I am very good with hot sauce.
What kind of hot sauce are we talking, Steve?
I
Frank's
mean,
or
Frank's Red Hot's great. I mean, I'm good with wings hot, like very hot. I'm good. So,
stop starving yourself. Guys, I'm great. I'm eating once a day. I'm getting my calories.
you know what?
Not starving myself. I'm just intermittent fasting.
I hate. Well, I mean, not eating until 9:40 at night is not intermittent fasting.
Well, I mean, this is the thing. I got home later than I wanted. Then I watched the Rocket Lab stream.
I'm just saying, intermittent fasting is like eating in a window of 12 to 8. That's intermittent fasting. Eating
yeah, one meal a day. It's one meal a day. You're right.
So,
You're right.
anyway, I have had a weird craving. I hate beer. Okay. I'm not a beer person. I will drink scotch or bourbon straight like it's water. I hate beer, yet I have a craving for freaking Corona for some reason. I've had this craving for like 3 days where I'm like almost at the point where I want to walk downstairs and get a Corona.
Lime or no lime?
No, a lime. Have to have a lime.
It's a good time.
I don't know.
When are you gonna come vacation with us someday, Steve? When are we going on a vacation? Me, you.
Do I
talk stocks?
Should I break the news?
I don't know what news you're breaking, so it's hard.
So I officially have a real ID in my wallet.
Oh, okay.
And
I was like, where is he going with this, guys? So I was like,
I officially got approved for a new passport.
Oh, there you go.
And I will be able to leave the country in like 4 weeks when I get the new passport in the mail.
Are you coming to Singapore, Steve?
I am not going to Singapore, Matt.
$2,000.
No, not going to Singapore.
Best premium economy.
No.
Is it because you don't want to see me get taken to jail for doing something, Steve?
Listen, I'm not trying to go.
I'm like, oh, I accidentally spit on the sidewalk, straight to jail. I'm like, shit.
Yeah, no, I'm not.
I saw Matt get taken off.
No, I know the laws here. I'm good. Like I'm not going now.
Was the shadow government surprised that you were a citizen?
No, obviously I'm a freaking citizen. Steve, why are you looking at me like that?
I mean, I don't know how you got the, your residence without having an ID/passport.
I don't know what you're talking about.
I'm just kidding.
I've had an ID.
But was it a real ID?
Yes. Well, no, it wasn't. See, you're making me say words, and I'm not going to fall into that trap. I had a traditional driver's license. Okay. I have now upgraded to a real ID. I am not going to say the sequence of words that you want me to say.
Steve, were you born here?
Yes, I was.
Were you born free?
I was born free. Free as a bird, Matt.
Steve, are you like a bird? You want to fly away?
Sometimes I would like to fly away, Matt.
Do you know where your home is?
I am currently at my home.
You realize I'm quoting a Vanessa Carlson song?
I do not realize that. You know, all I have to say is this is not going to be me, okay? Philosophical investor. This is not going to be me. All right. See it, Matt?
I just love that Chris is laughing in the back.
One of the funniest pictures ever. Anyway.
You're a good man, Steve.
All right, everyone.
Did it say Peter Griffin in the passport?
Yeah, AI is
on. I don't know when I'll be live with Steve next because he's going to be
this weekend. We're talking about.
Well, no, I meant I don't know. I don't think tomorrow. Maybe Saturday.
Tomorrow I'm with Roy and Tevis,
yes.
and I'm on a mid market close, and we will be announcing who the guest from Basis Points is tomorrow on the close. Over the weekend, I am planning on streaming a lot.
Oh yeah.
I am planning on doing nothing this weekend except working because that's all I will be doing. So,
and then you and I have our smart portfolio challenge.
Yeah, I made some moves.
I might make some moves tomorrow. Shit. If the market goes up again tomorrow, Steve, for Palantir meeting specifically, because I guess not again tomorrow, but Palantir was at least the other day it was doing really well. Let me see. Did it do well today?
Guys, if it was Michael Burry, I don't think I'd be able to keep that a secret in all seriousness.
You'd be so giddy.
I'd be so giddy.
No, I don't think I would be able to keep it.
I would be so freaking giddy.
Anyway. I'm excited. Do you guys have an idea when the following episode will be?
I mean,
maybe next Friday.
I don't know. Amit's traveling. We got the meetup this month. He's got other obligations. March may be a light month. April is going to be crazy. I think we have 4 or 5 already booked for April.
It's tough, man, because it's not one of those things like some of these things when you're talking about certain topics, it's like they're timely. So it's like you can't just, you know what I mean? Like some of them are timely, some of it isn't. So it's like, oh yeah, we did this a month ago. Then it's kind of like, man, it ruins some of the. So anyway, you're a good man, Steve.
Well, you're a good role model. All right, everyone. Tomorrow at 5:30, I believe Basis Points is coming out. Amit and I will announce it tomorrow, and Amit will post it tomorrow. It could be posted tonight and set on a timer. It's coming out tomorrow. So you have to wait and find out for tomorrow. We'll be back over the weekend. I am streaming tomorrow night. I am streaming Saturday night. Matt and I will be streaming during the day on Saturday or Sunday, and I will be streaming on my own probably at one point this weekend. So I may even do a members only stream for the first time, considering trying to get that done once a week, a members only stream, ask me anything thing for like 30, 40 minutes. We'll see if I can figure out a time during the day to get that done. I got to try to write 3 articles this weekend also. So we'll see. It's going to be a busy weekend.
I appreciate everybody. You know, we have over 400 people watching on Steve's channel. I don't know how many people are watching on mine. Please do me a favor. Check out Spotify. My hope, right, is to just help as many people as possible. I know I'm not a genius. I know I'm not an oracle. But I know a little bit. And so my hope is that, with Steve's help, with talking with other people, being on, the normal cadence of just doing the show, that we just help some people get up that learning curve. And that small learning curve, like, dude, you can help somebody out by years. So think about how much potential value. I don't know. Maybe you've gotten dumber listening to me, Steve. But I hope that some of you guys feel at least a little bit of value. Imagine withholding that value from other people, and just think, okay, if I could help that community get a little bit bigger, if I could help that community learn a little bit more, if I could help spread the news or at least get somebody a little bit further up that learning curve by just following me on Spotify and giving me a different lens and a different avenue for getting it out to the people, getting Steve's word out to the people, then that would be huge. And I would appreciate that, because the more that people follow, the more Spotify will actually send it out to people. And that's my hope, is to just help as many people. That's why I do it on Twitch. That's why I still do Twitch, even though I only have 106 people. Half those people are brand new people that have never heard the gospel before, let's say.
The gospel.
The White House gospel.
The White House quant.
White House quant gospel. So I'd appreciate you guys. Anything helps.
All right, everyone. We're going to get going. I do not have time for the gym. I apologize. I was trying to go, but listen, I need to figure out a way to manufacture more hours in the day. I don't know how I'm going to get that done. Got to figure it out. Got a ton of emails I got to go through. I'm not even opening my email. Took the day off from work. Obviously, reasons, basis points. Johnson and Randall hedge fund did a show with me. I'll be on their channel next week. We pre-recorded today. So tomorrow's going to be a busy day. It's going to be a busy weekend. But you know what? It's worth it.
You're the man, Steve. I really appreciate you, brother.
All right, everyone. Have a great night. Hopefully shit in the Middle East gets strained out. Hopefully the markets are green tomorrow. And hopefully everybody is going to do something good this weekend. And
yeah, get out there. Enjoy your life.
Saturday night, if you're not doing anything, I will be live.
I might go Saturday, depending on what happens with Rocket Lab Weekly. Maddie might need to go get a baked good. And
listen, if Maddie goes and gets a baked good on Saturday, maybe I will go to the bakery and get a baked good on Saturday. Maybe we can have them on stream on Saturday night.
Are we doing like a cookie baked good? Or are we doing like cakes?
I mean, I'm not so much a cake guy. I prefer pie, but you know.
Okay.
I may have a problem.
Shadow government?
No.
No? That sounds like a big problem.
Oh, I may have a problem. Those are not the texts you want to get.
The what?
These are not the texts you want to get from Amit at 9:53 at night.
Good.
So, all right, everyone.
You're the man, Steve.
I got to call Amit.
Yeah, I got to call. My sister's calling me. I got to go.
Talk to everyone later.
Later, brother.
Tomorrow.
Cheers.
Later.